welcome to the Property Wealth Podcast. We're so glad you're joining us today.
Absolutely. It's great to have you here.
You know, one of the biggest challenges people face when diving into real estate investing is figuring out the numbers.
Right, and that's where real estate calculators come in. They can really make a difference in how you assess a potential investment.
Exactly. Today, we're diving into some essential calculators that every investor should bookmark.
We'll cover things like cash flow analysis, ROI calculations, and even some tools that can help you determine your mortgage payments.
Plus, we'll share some tips on how to use these tools effectively, so you can feel more confident in your investment decisions.
And, of course, we'll touch on how these calculations can help you build long-term wealth, especially if you're starting a bit later in life.
Yeah, it's all about making informed choices, right?
Definitely. And it's never too late to start investing wisely.
So let's jump right into it. First up, let's talk about cash flow calculators and why they're so crucial for your real estate journey.
You know, Sarah, when we think about real estate calculators, it's not just about crunching numbers. It's really about understanding how those numbers can impact our lives, especially for people over 40.
Absolutely, Mike. I mean, at this stage in life, many folks are starting to think more seriously about retirement, right?
Exactly. And with retirement timelines shifting, it's crucial to have a clear picture of your financial future. The right calculators can help you project your income, understand your expenses, and see how real estate can fit into that picture.
Yeah, I've noticed that a lot of people are feeling the pressure from inflation too. Prices are rising, and that can really eat into savings if you're not careful.
Right. So when we talk about real estate, it becomes a hedge against inflation. If you own property, and especially if it's cash flowing, that income can help counteract those rising costs. Using a rental property calculator, for example, can show you how much income you could generate over time.
That's a great point. I remember talking to a listener who bought a duplex a few years ago. At first, they were nervous about the initial investment, but now they're not only covering their mortgage, but also creating a nice additional income stream.
Exactly. And that's the power of real estate. When you invest wisely, you're building wealth that can outpace inflation. Plus, it's a tangible asset. You can see it, touch it, and it can provide some emotional security too.
For sure, I think that emotional side is often overlooked. People want to feel secure in their financial future, especially when they start thinking about passing wealth down to their families.
Yes, and that's where real estate can play a big role. You know, I spoke to a couple recently who were looking to invest in a property to not only secure their retirement, but also leave something valuable for their kids. They used a wealth transfer calculator to see how their investments today could benefit their family down the road.
That's such a smart strategy. It's like they're thinking ahead, not just for themselves, but for the next generation. I think that's really inspiring.
It is, and with so many market shifts happening, having a handle on your investments is more important than ever. We've seen some fluctuations recently, and knowing how to calculate potential returns can really help you navigate those changes.
Right? It's about being proactive rather than reactive. I remember another listener who had to sell their investment property during a downturn, and they didn't use any calculators to assess their situation. It ended up being a costly mistake.
That's tough. When you have the right tools, you can make informed decisions that protect your investment. It's not just about the purchase price. It's also about understanding operating costs, potential appreciation, and your exit strategy.
Exactly. And I think many people over 40 might feel they're a bit behind in their investment journey, but it's never too late to start. Real estate can be a fantastic way to build wealth, even when you're older.
Absolutely. In fact, I know someone who started investing in their late 50s. They were concerned about their retirement savings, but used a property investment calculator to see what was possible. They ended up buying a few rental properties, and now they're getting closer to their retirement goals.
That's a perfect example of how it's possible to catch up. And using those calculators can really demystify the process, making it more accessible for everyone.
Yes, and you don't have to do it alone either. There are plenty of resources, forums, and even professionals who can help guide you through the calculations.
Right, and it's all about building that confidence, feeling empowered to make decisions that align with your long-term goals.
And speaking of goals, that's where understanding your investment strategy comes into play. The more clarity you have about your objectives, the better choices you can make.
Definitely. I think that's a great segue into discussing some core strategies. How to effectively use those calculators in real-life situations?
For sure. Let's dive into that next. So, let's dive into some of those real estate calculators that can really make a difference in your investing journey. I think a great starting point is the 1% rule. You know about that, right?
Yeah, I've heard of it. It's like, if the monthly rent is at least 1% of the purchase price, it's worth considering, right?
Exactly. So, if you buy a property for $200,000, you'd want to see it rent for at least $2,000 a month. It's a quick way to gauge whether a property might be a good investment. But remember, it's just a starting point, not the end-all.
Right. Because there's more to it than just that number. What about the 50% rule? I'm curious how that plays into the equation.
Good question. The 50% rule is a way to estimate your operating expenses. Basically, you take your expected rental income and assume that about 50% of that will go towards expenses, like property management, maintenance, and other costs.
So if you're expecting $2,000 in rent, you'd estimate $1,000 for expenses?
Yep, that's spot on. So if you're looking at a property that rents for $2,000, you'd want to ensure that after accounting for those expenses, you're still making a profit. It's a good reality check.
That makes sense. What about the cap rate? I've heard that term tossed around a lot. How does that fit in?
The cap rate, or capitalization rate, is another important metric. It's calculated by taking the property's net operating income and dividing it by the property's purchase price. So if your property generates $12,000 a year net income and you bought it for $200,000, your cap rate would be 6%.
Okay, so that's $12,000 divided by $200,000, right?
Exactly. So the cap rate gives you a snapshot of the property's potential profitability. Higher cap rates can indicate better returns, but they might also come with more risk, you know?
That's really helpful. I like how these rules can provide quick insights. What else should we consider when evaluating a deal?
Another useful tool is a deal evaluation checklist. I'd recommend starting with the basics: location, condition of the property, and then going into the numbers, like purchase price, estimated repairs, and potential rents.
So if I'm looking at a property, I'd want to ask myself questions like, what's the neighborhood like? And are there schools or amenities nearby?
Exactly. Those factors can really influence your property's long-term value. Then you could move into the financial side. Have you ever thought about how financing options can impact your investment?
Definitely. I know there are traditional mortgages, but what are some other financing options that might be available?
Well, besides conventional loans, you've got options like hard money loans, which are usually short-term and can be a bit more expensive, but they can get you into a property quickly. And then there's seller financing, where the seller acts as the bank. It can be a win-win if both parties agree on the terms.
That's interesting. So if I find a motivated seller, I might be able to negotiate terms that work for me and them?
Exactly. It can open up a lot of doors. And don't forget about partnerships. Teaming up with someone who has capital or expertise can help you enter the market faster and mitigate risks.
Speaking of risks, what about property types? Do you have a preference when it comes to single-family homes versus multifamily units?
It really depends on your goals. Single-family homes can be easier to manage, but multifamily units can generate more consistent cash flow. You know, with multifamily, if one unit is vacant, you still have income coming from the others.
That's a good point. So if I'm looking to build wealth over time, maybe a multifamily property might be the way to go?
It could be, especially if you're ready to handle the extra management. And speaking of management, have you looked into property management companies?
A little bit. I mean, it sounds like it could save a lot of headaches, but is it worth the cost?
Well, it really depends on your situation. If you're hands-on and enjoy managing properties, you might want to do it yourself to save that cost. But if you want to focus on growing your portfolio, or if you're busy with other commitments, a property management company can be a game changer. They handle tenant issues, maintenance, and all that jazz.
That makes sense. So it's about finding the right balance and knowing what you're comfortable with.
Absolutely. And don't forget to consider your exit strategy. Knowing how and when you want to sell or refinance can shape your investment decisions from the start.
Right, having that in mind from the beginning can really help, I guess.
Exactly, and before we wrap up this section, let's touch on some common pitfalls.
Oh, I think that's really important. What's the first one that comes to mind?
Well, one of the biggest is underestimating costs. Investors often overlook maintenance, repairs, and unexpected vacancies. It's crucial to have a buffer in your budget for these surprises.
Yeah, that sounds like a real trap. What about the importance of doing thorough research?
Oh, for sure. Failing to understand the market can lead to poor decisions. You need to know the area's trends, property values, and even the local economy.
So, staying informed is key, huh?
Definitely. And don't forget about emotional decision-making. Sometimes, it's easy to fall in love with a property, but you need to keep your head in the game and analyze it objectively.
That's really solid advice, Mike. I think having these strategies and understanding the common pitfalls can really help us navigate the real estate landscape more effectively.
So, when we talk about real estate calculators, one of the biggest pitfalls I see investors fall into is over-leveraging.
Oh, definitely. It's tempting to think, I can borrow more, and that means more profit, right? But it can backfire so easily.
Exactly. I remember this one client of mine. Let's call him Tom. He bought a property in a hot market, using nearly all his savings as a down payment, and financed the rest.
That sounds risky. Did he have a backup plan?
Not really. He thought the market would keep climbing, but then it cooled off. He found himself with high monthly payments and little cash flow.
Yikes! So he was stuck with a property that wasn't generating enough income to cover those costs?
Right. And on top of that, he hadn't factored in maintenance costs and property taxes. It became overwhelming for him.
That's a tough lesson. I guess the takeaway here is to really crunch the numbers, right?
Absolutely. Understanding your cash flow is crucial. You can't just look at the purchase price. You need to consider ongoing expenses.
Like what, specifically?
Well, things like property management fees, insurance, utilities, and, of course, repairs. They add up quickly.
Makes sense. And if you ignore those hidden costs, it can really eat into your profits.
Exactly. I had another client. Let's call her Lisa. She bought a property, and it seemed great on paper, but she didn't account for the fact that it needed a new roof.
Oh no. That's a big expense.
It was. She ended up spending more than she anticipated just to keep the place habitable.
So how can someone spot those red flags early on?
Well, I always suggest getting a thorough inspection before you buy. And, ask yourself how old the major systems are, like the roof, HVAC, plumbing.
That's incredibly important. So many people just look at the aesthetics and don't think about what's underneath.
Exactly. And don't forget about potential tenant issues. Bad tenants can really derail your cash flow.
Oh, for sure. I mean, having to deal with tenant problems can make owning rental properties a nightmare.
Right. I had a friend. Let's call him Dave. He was so eager to rent out his first property that he skipped the screening process.
Uh-oh. I'm guessing he didn't have a great experience?
Not at all. He ended up with tenants who were late on rent, and there were complaints about noise and property damage.
That's frustrating. What did he learn from that experience?
Well, he realized the importance of doing thorough background checks, checking references, employment history, and even past rental experiences.
That's a solid strategy. It's worth the time up front to avoid headaches later.
Exactly. And then there's the issue of timing the market. Some investors think they can time their purchases to hit the peak.
Yeah, that's a gamble.
I know someone who waited and waited for the perfect moment. But by the time he decided to buy, prices had gone up significantly.
So he missed out on a good opportunity?
Right, and now he's stuck watching the market while he waits for a better time, which might never come.
It's so easy to get caught up in that mindset of trying to predict the market.
Definitely. Instead, I recommend focusing on your long-term goals.
That's smart. So it's about finding properties that fit your investment strategy, not just waiting for the right moment?
Exactly. And another thing to remember is to stay adaptable. If the market shifts, be prepared to pivot your strategy.
That's a great point. So if you see a downturn, maybe you look into different types of properties or areas.
Yes. And also consider diversifying your portfolio. don't put all your eggs in one basket.
That's really sound advice. Now, what about the people who have already made these mistakes? How can they recover?
Well, the first step is acknowledging what went wrong. Reflect on your experiences and learn from them.
Sounds like a good plan.
Then, if you're facing cash flow issues, consider refinancing to lower monthly payments or even selling a property that isn't performing well.
That makes sense. Sometimes cutting your losses is the best choice.
Exactly. And don't be afraid to seek help. Real estate advisors can provide valuable insights, especially if you're feeling overwhelmed.
And it's always good to connect with others in the investing community.
Absolutely. Networking can open doors to new opportunities and mentorship.
So in summary, it's all about staying informed, being proactive, and learning from past mistakes, right?
Yes, and always keep an eye on your cash flow, do your homework on potential properties, and don't rush into decisions.
Such great advice.
And remember, real estate investing is a long-term game. Patience and strategy go a long way.
Well, that's a perfect segue into our next steps.
Yes, let's dive into how to effectively research properties and create a solid action plan. You know, Sarah, one of the best things about real estate investing is that you can start right where you are. You don't need to wait until you have a ton of money or experience.
Absolutely, Mike. So let's dive into some immediate actionable steps that our listeners can take today to get started on their real estate journey.
Yeah, let's kick it off with some practical tools. One of my top recommendations is the BiggerPockets calculator. It's super user-friendly and really helps you analyze potential deals. You can input your numbers, and it gives you a clear picture of cash flow, ROI, and more.
Oh, I love that tool. It's definitely a game changer. And for those who might be looking at rental properties, Rentometer is fantastic. It helps you quickly compare rental prices in a specific area. You can see if your potential rent is in line with the market.
Exactly. And that's crucial, right? You don't want to overestimate your rental income. Another great resource is Zillow. Not only can you browse properties, but their mortgage calculator is pretty handy too.
Right. It's like having a little financial advisor in your pocket. And if you're actively looking at properties, accessing your local MLS can be invaluable. It gives you the most accurate and up-to-date information on listings.
Totally agree. And for those who might be just starting to look at deals, consider creating a checklist for properties you're interested in. List down key metrics like price, potential cash flow, and neighborhood data. It can keep you organized and focused.
That's such a smart idea. And don't forget about the power of networking. Joining a local real estate meetup can really help you connect with other investors. You can learn so much just by talking to others who are in the same boat.
Yes, networking is key. And if you can't find a local meetup, there are plenty of online communities. BiggerPockets has forums where you can ask questions and share experiences with fellow investors.
And speaking of learning, there are some fantastic books and podcasts out there. I always recommend The Book on Rental Property Investing by Brandon Turner. It's very practical and goes into detail about what you need to know.
Great choice. And don't forget about podcasts. The BiggerPockets podcast is a must-listen. They have real investors sharing their stories, which can be both inspiring and educational.
For sure. And if someone wants to really dive deep, they could set a simple goal, like analyzing one deal per week. It doesn't have to be a big deal, just enough to get comfortable with the numbers.
Oh, I love that idea. It's all about building that habit. And even if you're just starting, remember to keep it simple. You don't need to know everything right away. Focus on one step at a time.
Exactly. And if you ever feel overwhelmed, just take a step back. Maybe you could even dedicate a specific time each week to review your progress or to learn something new.
That's a great tip. Consistency is key in this game. And if you find a property that interests you, don't hesitate to run the numbers multiple times. The more you practice, the better you'll get.
And don't forget to celebrate those small wins. Even if it's just understanding one more thing about a property or connecting with a new investor, it all counts.
Right. Every little bit counts. And as you build confidence, you'll find yourself naturally moving to the next step.
So with all these tools and resources at your fingertips, you're really set up to take action. Just remember, it's all about starting where you are and making that first step.
Absolutely. And now that we've laid out these actionable tools and steps, let's bring everything together. So, as we wrap up this episode, let's quickly recap some key takeaways, shall we?
Absolutely. One big thing we discussed was how crucial it is to have those real estate calculators bookmarked. They're such handy tools for making informed decisions.
Right, and we talked about how the mortgage calculator really helps you grasp what you can afford. It's all about understanding your budget, isn't it?
Exactly. And then there's the cash flow calculator, which is essential for determining if a property will bring in positive cash flow. That's like the lifeblood of any investment, wouldn't you say?
Definitely. And don't forget about the ROI calculator. It's a straightforward way to see how well your investment might perform over time. Knowing your return can make all the difference.
For sure. And we can't overlook the importance of using a property appreciation calculator. Understanding potential growth and value is key for long-term wealth building, right?
Yes, it really is. So, to all our listeners, remember that these tools can empower you on your real estate journey. Building wealth takes time and strategy, but you've got the resources to do it.
And speaking of resources, if you enjoyed this episode, please give us a like, subscribe, and share your biggest takeaway or any questions you might have in the comments. And don't forget to share this with someone over 40 who's thinking about investing in property.
Absolutely. It's all about community and support. We're in this together.
And next time, we're diving into the tax benefits of real estate investing. There's a lot of potential there that you won't want to miss.
That's right. So stay tuned, everyone.
We can't wait to see you in the next episode. Take care and happy investing.
Bye for now.